quality day trading education and professional level trade dissection and analysis, you have come to the right place. My name is Pat Mitchell. I've been a professional trader for the past 11 years, and I'm here to do exactly that. I'm here to give you high-level professional day trading education, all for free, right here on YouTube and on X. So tonight we're going to be discussing how to manage mistakes. Now, I had a big mistake that ended up costing me on a drawdown about $10,000. Now, I managed it out to a negative $1,600 loss instead of that $10,000. And I'll explain. It was a big mistake. It was a big error. And it's a matter of keeping calm and keeping cool and managing and seeing the charts for what it is and not giving into emotion. I'm going to teach you exactly how to do that in this trade dissection. I'm also going to be going over 2 other trades that I took where I was nicely green. So you'll see how it all played out. Give me 1 sec. I'm going to fire up the charts. Let's rock and roll. Hopefully you guys have had a great day. Okay, so now that we are into the charts, folks, before I go over the fat finger and the mistake, let's talk about the trades that I did take. Now, the very first trade that we took, and I better zoom in on the entry so then obviously you guys can get a better idea. What is going on? Oh, I'm on the 2-minute. Sorry, guys. That's why. 1 sec. Sorry, folks. I do not have my shit together. Apologies. There we go. So on SPY, what the trade plan was to take this long because of the amount of sell-off that we have had. And it was holding some key levels. It was still holding low of day. Now, it was looking weak. And I will say that this trade short looks like a trade short that could have been taken and possibly should have been taken, but we were potentially remounting a very key range, which is this 567.89 level. Now, Qs did not do that. Now, if this was any other market, if it showed signs of rounding and confirmation, I would have absolutely taken this short. There wasn't signs of confirmation yet. I know the writing was on the wall. I know that it looks that way, but it isn't. There are subtleties that I simply just don't have the time to go over. I went over them live on screen share here this morning. But when I say I know it looks like a guy absolutely should have went short, you're not 100% correct on that. And that comes with time and experience. And if you captured the short, good job. I'm not saying that there wasn't a short available, but we definitely wanted it higher to test key ranges first. But let's go over the trades. So on this here, the trade that I was personally looking for was here on SPY. Now, if you take a look, we opened up right here. Okay, that's right at that level. Then it pushed up and above, pulling back. That is a very key remount type of play that we've all seen a million times. I've seen a million times. And the trade was to take it long coming down into this level, that 567.89 level, start in. If it wanted to wash out, that's okay. You simply add in, get out fully on the retracement, which is exactly what I did in this case. And then when it pops up and it pulls back, remounts yet again on that key level. Remember, as a technical trader, and this is one of the hardest points to get through to new traders. And I'm not trying to be condescending. It's something that I struggled with for a long time too. But as a technical trader, when you are above support, you need to go long into that support. No matter what might be screaming inside your mind or your stomach telling you to go short or long, depending on the situation. When you are above support, you have to go long into support. Its strategy is not about what you want to do or what you think you should do or what you think the charts are doing. That's what gets traders into trouble. And that's why so many traders will never, ever develop the consistency that is needed in order to do this and have a long-term career. Remember, I've been doing this for 11 years professionally and wildly successfully. So when I'm telling you this, you have to listen to me. There are very few people out there that can legitimately say that they've been doing this as long as I have, with the success that I've had. Yes, there are traders that have consistency and it ranges up and down, up and down. I do not roll like that. I like things consistent and even always, because with that comes a lot less stress. A lot of people talk about day trading being a stressful job. It is not. It only becomes a stressful job when you're not following strategy and you're not being disciplined and have your emotions under control. So that's something to remember. Above support, you go long into that support. Below resistance, you go short into that resistance. But as you can see at that time, right, we're testing support, right? We're above support on SPY. Q's was below. SPY is above. We don't have those two charts lining up perfectly, touching dicks, so to speak. It's got to line up, man. If it doesn't line up, you can't throw a bunch of wild size at it, and you have to follow the broader, bigger market, which is SPY. SPY is showing us that it is above a key support level. Q's is not, but it's very easy because Q's actually was holding another support level down right there, bottom ticked it. It's holding support. You have to go long. And that's what I did. Went long second time, paid myself on the push up, simply stopped out the rest. And on that, locking in $5,443, which is another point that I want to make. On this trade where it failed this level, I added in, paid myself on the push, right? I have a management tactic that will make me green when most people are red. This little trade here, long into this level, little pop back up. And locking in on these types of trades, on a failed trade, I'm still locking in almost $5,500. This is why it's so important to learn from someone that has been around the block and can truly show you. Not only do they know what they're doing, but they actually have a knack for teaching. It's a rare quality to find those two things. And that's why it's like, I'm not pushing you guys to come in and join my service for some sort of like, to give me your money. It's not about that. I do this because I genuinely want to train traders. When I get emails and messages about how I've changed somebody's life, and I know I'm going off on a different direction here, and I don't mean to, I'll promise I'll make this quick. That's what it's about. For people that have never helped someone to actually achieve goals, especially financial goals, and change the direction of their life, you have no idea how good of a feeling that is. So when I'm telling you these things, you got to trust me on this, guys. I'm not here to fuck with you. I've been doing this a long time, 8 years on YouTube, 11 years professionally as a trader. If I was here to fuck with you, you definitely would know by now. That's a long time of consistency like that. So SPY, walking in $5,500 on a trade that failed. And I can teach you exactly how to do that. Now, let's talk about another trade. So SPY, one sec. Let me get this moved over. Oh, I better clean this up before it gets too wild with all my drawings. Okay. So SPY coming down into a level of support. Again, as it comes down into that level of support, you may be wondering, like, I am fishing for a long, okay? Because I've seen it a million times where they'll drive it into a lower price point, and then that's when that volume comes in. And shorts start getting freaked out that they didn't pay themselves, and it starts screaming back up. Now, I'm never looking for that big trade, but the fact remains that I'm still looking for that long. We are sold off. Generally speaking, when we overshoot this 200 SMA on the daily, and I'm going to give you guys a real good tip, and you should probably write this shit down. When we gap down below and overshoot that 200 SMA on the daily, we gap down well below. Those are the days that come screaming back up. It didn't do that today. But the odds dictate. Go back and take a look at the charts, guys. It does it all the time. Just because it didn't do that today doesn't mean that it won't do it in the future. And when you set yourself up for success and you watch for these key things, that's when you hammer home these massive, massive trades. Now, it didn't do that. So fishing for that long down here, I should actually zoom in a little bit more on this one, because I was very specific with my entries and exits. It's hard to get it. but right down into lows of that level or into that level, I entered and I paid myself. So enter, pay myself. Comes down again. I enter, I pay myself. Enter, pay myself. Now I'm not adding in anymore. It's had its chance. It needs to rip or I need to get out. So I've already taken off bulk. And then I'm simply paying myself into areas of resistance. Mind you, tight resistance, but still resistance. Nailing the top there. And then simply just stopping out on the rest. Locking in an additional $2,011. So now let's talk about the fat finger and the mistake that was made. And it happens to the best of us. I hear a lot of people say when they make mistakes, oh, I'm never going to do that again. And I always jump in and call bullshit on that because it's not about never doing something again. That's not going to happen. That is certain. You will always make mistakes. It doesn't matter. You could be doing this for 50 years. You're going to make mistakes. You're going to slip up. And the key is to make these mistakes less and less and be aware of them and correct them. Okay. So let me pull up the entry chart here. Oh, I got to get zoomed back out one sec here, folks. So no real need to zoom in. I just want to show you that it was a fat finger. So what happened is I had a little bit of dyslexia here this morning when I was searching for acquiring my my strike on the options chain. And I chose a strike that was 10 points or 10 strikes lower. That is a big deal, guys. Premium is already expensive. The strike that I chose, the 468s, were already $350 a contract for premium. Okay. Well, this I chose by accident the 558s instead of the 568s. That's 10 strikes away, man. That is a long ways away. That's a long ways away. So as soon as I entered, I realized what I did. I look over at the damage because you can't just simply get out. If there's damage like that, and it was immediately huge money down. It was about initially about 5-6 grand immediately done, fucked. So when that happens, it's not about holding and hoping because I'm always using size no matter what happens. No matter what happens, I'm comfortable with that loss. Even if I took a $10,000 loss, a $15,000 loss, a $30,000 loss, it'll never damage me. So in this case, with the drawdown as it was, I entered here, okay? As it came down here, that's where I entered with the 558s. Now, as it comes down, it's obviously melting down even further, right? But I know that there is support there and I have to trade my strategy, even if I fucked up and I fat fingered. If it's a normal fat finger and it's a few $100 loss, I'll just cut it and focus back on the bigger picture. But when you're working with something that's thousands and thousands and thousands of dollars, the damage is done. This is an important note here, guys. If the damage is done, you need to accept it and you need to look for a potential exit, but a proper, unemotional exit. And that's what I did. Now, I didn't add into this one because what I did then was acquire my right strike and work the trade that I needed to work. Okay. So that's when I grabbed the 568s and I started paying attention to that and working that trade. Now with this, because I know the nature of this, and this is where a lot of people get fucked up when they watch my shit because they're not giving any type of respect to experience. What happens when we fail levels like this, guys, is it does exactly this. When you fail a level, it will wash out. That is your chance to add and get out fully on the retracement. And that's all I did. Now, I didn't add. I didn't do that. But what I did do was wait for the retracement for it to come back up, bump its head, and retest. Remember, we are technical traders. When support fails, it will come back up and retest as resistance. That is technical analysis 101, ladies and gentlemen. And if you are a technical trader, you need to trust that. And when you get yourself in these jams where you completely shit the bed, which I did, even if you are taking a loss, you need to keep your shit together and you need to watch what the market is telling you. Every day it does this, just like Q's did. Q's washes, pops back up, to retest. Guys, it happens all the time. And I get this a lot where people they'll make comments in the comment section, and I can tell they're very new to this. And then when I call them on that, they always try and say, no, I've been doing this for 5 years. Well, if you've been doing this for 5 years and you still think like that, you ain't making a fucking dime. You're not understanding, or what a lot of people fail to realize and understand is that technicals do the same thing over and over and over again. In case you haven't noticed, I have taken the exact same trade day in and day out. If you actually take a look, every single one of my trades that I take, they are the exact same trades every single day. Every single day. And if it breaks that level, I do the same thing. I add on the wash, get out fully on the retracement, and then I reassess. This is not complicated. There's nothing complex about trading, guys. It really isn't. When you actually understand how technicals work, right? And how the price action moves, how the market moves, this becomes like shooting fish in a barrel. Even when you make a huge mistake and you're potentially in a drawdown of thousands of dollars, and it's going to happen. It happens to the best of us. It's not that big of a deal. But what becomes a big deal, and this is where I really need to stress this point, and I know this is a little long-winded, but this shit's important, because far too many people, when they get in these situations, they fucking freak out because they look over at their P&L. When I look over at my P&L, I need to know what the damage is. I assess, I look at the damage. I know as it's coming down. I'm not staring at it as it's coming down, but I know as it's coming down, it's going to be roughly a $10,000, $12,000 fucking drawdown. It happens. It's not going to break me, man. So then I simply wait, and I could have added there, but I just wait for the retracement that's going to come right back in, right perfectly into my entry. Now, because of the nature of how far away that strike was, yeah, it's not going to come back flush. If that was, let's say, the 568s, the proper strike, and you entered right into that level, and you didn't add on the wash, and you got out fully on that retracement, and I was actually slightly green. It came up to about $300, and then I just missed that exit, and by the time I exited, it was $1,600. Not a big deal. It's about keeping calm, cool, and collected in these positions. Get your emotions under control, or you're going to have a hard time, because these types of mistakes are going to happen. And if you want to learn from someone that can teach you exactly how to manage positions to where nothing bothers you anymore, you don't have stress. If your heart's always racing in trades, guys, you're doing it wrong. It's because you're not understanding what you're actually seeing. And I can help you with that. Come to tricktrades.com. If you don't want to, that's okay. That's fine. Continue to spin your wheels. All good. No sweat off my sack, so to speak. Continue to enjoy my free content here on YouTube and on X, but you got to like the videos. And if this is the second time viewing the channel, you have to subscribe. I think that's only fair. So on that note, folks, I hope you all have a wonderful evening. I will see you tomorrow. Adios.